Well, stocks closed lower on Wall Street as investors count down to the end of a challenging year. The Dow losing more than 350 points, the S&P falling more than 1%, and that market is on pace for its worst year since 2008. The Nasdaq finished down nearly 140 points. Inflation's grip on the new year will remain strong, but some relief could push the U.S. economy back in the green. As you likely know all too well, inflation has been burning a hole in Americans' pockets all year, fueling concerns on how to continue to afford everyday items. Gas prices rose to the highest level in decades, but GasBuddy is predicting drivers could spend less in 2023 compared to this year. Meanwhile, the housing market is expected to cool off even more in 2023. Analysts saying it will not be a buyer's nor a seller's market. To give us more perspective, Dan Roccato, finance professor at the University of San Diego. It's good to see you, Dan.
Hey, Natasha, how are you?
I'm well, thank you. And Dan, GasBuddy predicting a major drop in gas prices in 2023 compared to 2022. That's good news. What mainly is fueling that?
Yeah, we'll take that, won't we, Natasha?
Yeah.
Especially after what we saw this year. Listen, it's all about the price of oil, right? So what we pay at the pump, 65% of a gallon of gas, the price of a gallon of gas, is really related directly to oil. And oil, in large part, is related to the state of the economy. As our economy has slowed, as the global economy has slowed down, that means you and I are spending less to fill our tank at the pump. So there's some good news. It's a silver lining, if you will, with a slower economy.
And meanwhile, home prices also steadily dropping after hitting that peak this summer. What is driving that?
Yeah, your home, my home, Natasha, is worth 3% less today on average than it was just a few months ago. And the villain here is interest rates. As the Fed has driven up the price of money, interest rates, that means that mortgages cost more. And the median home actually is about $750 a month more today than it would cost you just a few months ago, just because of higher interest rates. So that's really the villain here, these higher interest rates. And I suspect we're going to be with this for quite a bit of time yet.
And so if analysts are saying it's not a buyer's or a seller's market, it's just bad for everyone. Is that right?
Yeah, we're sort of stuck in neutral when it comes to housing. You know, I don't see this major crash. I think prices might drift a little bit lower from here, depending on the market you're in. But I don't see a major crash like we had, say, in 2008, for example. But I do think, as you said, we're kind of stuck in this no man's zone, this neutral zone. Not a lot of activity either way, at least until we see some movement on interest rates.
All right. In terms of lower gas prices, is that the sort of trend we can start to see across our economy as a whole? Or when will prices for things like groceries start to come down as well?
Boy, wouldn't that be nice? So, have you bought eggs lately, right?
Yeah.
So you're absolutely right. I think we're sort of at the peak of this inflation. You and I have talked about this before, Natasha. It doesn't mean prices necessarily going to start coming down, but it does mean that we're going to stop to see this rapid increase in the price of most goods that you and I buy at, say, the grocery store. We are already seeing some prices come back a little bit. But I don't think we're going to see a 20% reduction in our grocery bill anytime soon. But the good news is I think we've peaked and we will start to see a little bit of price relief.
All right, Dan Roccato, always appreciate it. Thank you so much.
Thanks, Natasha. Take care.
Take care.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.